What's your top play for the second half of the year? What should investors be doing to position themselves?
Well, we've increased our allocations to international stocks, so we've raised those allocations on average to about 15% of our portfolios. And then overall, we still broadly like technology, but we stay balanced in most of our portfolios with a good position for taxable accounts and municipal bonds.
So international, just like Josh Brown was saying, is that a valuation call? And when you say 15%, where is it historically, or where's it been?
It's been as low as 8 to 10% for an average portfolio, so we've increased slightly, and it is because of valuations, yes.
So you're underweight international substantially then, because of the market cap weighted MSCI index, just as an example, international stocks are like 48%. So are you saying 15% of the equity, or you're saying 15% of a total portfolio?
No, 15% of the total portfolio. So for example, if a portfolio is allocated 50-50 stock bond, it's 15% of the total.
Okay.
So for a more aggressive positioned,
right?
Correct. For a more aggressive client, it can be as high as 30 to 35% of the total portfolio.
What makes you make that decision to go up or down from where you are today?
Overall, it was based on valuations and just looking at the economics in the U.S. While strong, we're still later in the recovery. So certainly we know we're getting towards the end of the cycle. We don't see a recession in the next 6 to 12 months, but we know that this isn't going to go on forever. So we want to be positioned to buy things cheaper elsewhere. And we think those opportunities are outside.
I think you hinted at this a little bit. Where do you think the yield curve is going at this point? Because the banks have really stalled out here as we haven't seen the rise in interest rates that so many people had anticipated.
Yeah, that's a great question. I'm not sure it's going to invert, but it's getting very close. I have been a fan of interest rates staying a bit lower. I also was not thinking that we'd hit 4% on the 10-year Treasury. So at this point, we may or may not invert this year, but we're ready in case it does.
So are you avoiding financials then?
We're not specifically buying financials. We're staying broad-based with our allocations, whether it's for just the S&P growth sector overall and the S&P 500. And then for bonds, we've stayed with average intermediate duration. We have some short, some intermediate, and some long, but all high credit quality.
So Gail, it's Joe. You said you're prepared in case it does invert. I think potentially it does. In that preparedness, what would be the strategy?
Well, that was where we kept positions in long bonds. Many of our peers were going all short duration, particularly with the muni space. And we think that hurts the client's dividend yield too much to go all short. So we've kept fully a third of our portfolios in long duration municipal bonds for the taxable accounts. And then again, we've had as much as a third in short and then the balance in intermediate. So that gives us some play in case the yield curve does invert.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.